And what I take a lot of confidence from, and as you say, we had our Oliver Wyman independent review published last week, but two of the key elements in there we had addressed actually right back when we reopened the market in March. So the first is getting OTC reporting that we can see, because as you rightly said, we didn't see those large OTC positions, which, as Oliver Wyman said, contributed to the situation last year. We now do have that reporting. We'll make that reporting better, but we have that data.
Who's regulating the reporting of that OTC? It's as old as the hills, and being a former derivatives man as well, I get this. Now, you can have an OTC transaction between two of the massive players in the market, or between one of the massive players and perhaps a customer or a producer out there as well. Why does the LME have to see it? Is there a legal requirement now for those transactions to be shown on the LME?
Yeah, great question. So that doesn't arise from regulation. There's no regulation in Europe.
So the same problem could happen again.
But so the way that we have addressed that on the basis of, or on the back of what happened last year, is that we have written into our rule book that if you want to participate on the LME, you need to participate in that OTC reporting. So we have used our rule book to achieve that, but you're absolutely right, it doesn't stem from regulation.
At the moment, you are not providing trading in Asian hours on the nickel contract. When is that going to be restored, and why aren't you doing that?
Yeah, very important question, because as you know, all of our other metals open at 1 a.m. London in order to capture that Asian day where so many of our important users are operating. After the nickel situation last year, we took a deliberate decision to not open the nickel market until 8 a.m. London, and that's just to ensure we concentrate trading during the London day where there is the most liquidity, which the aim there is to avoid excess volatility. We have said that we want to revert to Asian hours for nickel, and we know that there's a lot of untapped demand, a lot of our Asian clients who really want that. But as you'll understand, we have to do that in a way that means all of our stakeholders are comfortable with the risk profile. We're not quite there yet, but I am really, really hopeful that we will get there soon.
And just in that context, perhaps worth reminding our audience that you are owned by the Hong Kong Exchange. Yeah. So there is a very clear connection with that market and that part of the world. How's it going restoring relations with clients who were very unhappy? And this went to the High Court, and large funds like AQR Capital were keen to take legal action against you alongside others. How long is it going to take for that scarring to heal, do you think? What kind of conversations are you having with big clients?
Yeah, so we very much tried to adopt a forward-looking pose here, right? So clearly there are some outstanding issues from last March, and they can be dealt with through the right channels. But ultimately, we want to look forward, and we think that our members and our clients want to look forward, because as you said earlier, we're in the middle of this incredible transition in the metals market, and everybody should be seeing that as a positive opportunity. We want to create a market where people can hedge effectively, where they can invest effectively. So we have the issues of last year, and I say we'll deal with them through the proper channels, but what we want to do is to build forward, take the recommendations of the Oliver Wyman review, other ideas that we have coming in from the market, and justify our position as the centre of this market.
And justify your position based on the fact that you are there for hedging of users, hedging of consumers as well, as opposed to just the forum for speculators as well. It's a point that's as old as the hills, the degree of speculation leading the price or following the price as well. Do you have any idea of kind of how much business is actually end users or end consumers using your market, and how much is, dare I say it, just pure speculation?
Yeah, we actually have a pretty good balance on our market in the way that the business breaks down. And it's not quite 50-50, but there is, we're not far off there being that even split between physical hedging activity and investment activity. It obviously depends which contract you're looking at. And I've always said that I do think this is an ecosystem, and I think both sides benefit from each other. Investors want to come to our market because of the macroeconomic relevance, and you only get that if you have the physical trade. But at the same time, physical players need the liquidity that financial activity can bring. So I quite like the balance we have on our market. Clearly, you can have disruptive events like we saw last year, and we need to solve those through market structure. But I think our market and any market, it's got to be that symbiosis.
We've talked a lot about China reopening with the likes of Rio's here in Davos as well. What is that doing to the price of metals that you can see? Have you seen a physical uptick in all the metals across the board, or actually have you been surprised by a lack of activity in some of them?
So we've absolutely seen an uptick. I think if you certainly just looking at volatility, November last year, volatility did increase, which was primarily a result of the reopening rumours and the impact that had on the market. We have seen some uptick on a number of the metals, but it's still, as I would describe it, as quite a volatile uptick as investors and users effectively process news flow day by day, as we're seeing in equity markets as well. But certainly looking at the commodity analysts, I think the consensus now is for a sustained uplift in prices over the next year. We'll see if that happens. It's not our job to forecast, but we'll be ready for that if it happens.